Hey, good morning. It's Edna here live with Free Coaching Friday. And today we're going to talk about multifamily is a business. A lot of people have been asking me questions lately. What's the difference between houses and multifamily? When you say multifamily is a business, I thought I'd do a live on it and explain it to you again. And remember, if you need my help building your multifamily portfolio, reach out to me at edna@ednakeep.com. I'd love to have a chat with you and help you. Okay, so multifamily is a business. What do I mean by that? Well, right off the bat, they finance it like a business. They don't finance it like a house. So a house, even a rental house, are based on comparative values. So same neighborhood, any property that sold recently, add a garage, minus a garage, add updates, minus updates, that sort of thing. They base the value on your property 100% on what the market is in your area. With multifamily, they're looking at the numbers. So when you're financing multifamily, they're looking at the income versus the expenses. And that's where the business part lies. They also qualify the building like they would qualify a business. Does it pay for itself? And is there money left over to, pay the people to run it and everything else? Is it a good investment for the lender to get into? And lenders love multifamily. Like, we are routinely getting long-term amortizations, really great interest rates, like 35-year amortizations. I think the last one that we signed up was 2.04. I think the highest we have is just over 3%. So, really, really good numbers on that. And that doesn't happen with every business either. Lots of times we were actually looking at buying a retail business just recently, a dollar store, which was, the numbers were great. They wanted to give us 50% financing. Well, that's a lot, especially when you're used to, 15 or 20% with your residential multifamily. But the ways that you want to treat your multifamily as a business, besides the fact that the lenders treat it like a business, is you want to make sure that you are doing your books every month. Like, don't leave it till the end of the year and you're trying to figure out where the heck things are. You need to be on top of it every single month so you know where things are. You need to be talking to your property manager every single month so you know where repairs and maintenance and vacancy and all that kind of stuff is. Eventually, once you have, a property manager that you know, like, and trust, you might not have to talk to him every month, but you should be looking at your numbers every single month. You should be looking at your rent roll. You should be seeing what's going on. I get my property managers to actually write notes so I don't have to be bothering with phone calls all the time. So if somebody hasn't paid their rent by the 5th of the month, why? What's the reason? And some they always pay on the 5th of the month. Okay, so that note's probably in the rent roll, but it might be this time, they didn't get their income on time, or they got laid off, or it's always something you want to be proactive on. You want to know where things are, and you can rely on your property manager to a certain extent, but just know they do not have the vested interest in your building that you do. So you have to stay on top of it. You got to watch repairs and maintenance. I've seen property managers use your building as an ATM. Oh, what can we do here today to make some money? You got to be really careful. And if you don't, you're going to get shafted. Another way, get your books professionally done too. Like, I do quarterly reports for investors myself, or with the help of a bookkeeper. But at the end of the year, I get it professionally done by Virtus Group in Saskatchewan. But have a CMA who knows what they're doing. Do your books, because there's write-offs and stuff. Some years you don't want to do those write-offs, so they're the ones that can advise you on that. They can also advise you on how to set up your holding companies and so you get paid dividends and all that different kind of stuff. And it's just impossible to do that on your own. Unless you're an accountant or somebody who's got an accounting background, then you can do it on your own. But those are some recommendations I have. Keep your bills paid up. I find the best way is, give yourself maybe a few days every month where you just set it aside and make sure that your bills are paid. And like I said, monitor, get price quotes. That's another really big thing. If you get a guy who's consistently cheaper, like, you can let it go, but if you notice that they're starting to price creep on you, like, okay, oh, well, it was this much last month, I noticed that they're going up $20 an hour. Well, holy cow, so you got to stay on top of that kind of stuff, because they don't reach out to you all the time and say, hey, by the way, your rate's going up to such and such. They just creep it up on you. And, if you don't pay attention, that kind of stuff can add up to a lot of money, especially, when it's little bills, you don't notice. But when it's a whole bunch of little bills, you really do notice. You got to stay on top of that. Same with your utilities. If you're paying the utilities for your buildings, whether it's a house or an apartment building, stay on top of them, because if you start noticing that your water bill's higher suddenly, it could be that there's a leak in the building, and the water company doesn't always catch that. We're fortunate here in Regina. Every once in a while, we've had water leaks, and they send us actually a notice with our bill saying, hey, notice that your bill's really up this month. You must have a water leak. Let's check it out. So then you get in there and check it out, because you don't always see those water leaks. They're under the floorboards, stuff like that, or they're in a tenant suite and the tenant's not telling you. But watch that. We find that if we can't find a leak anywhere, we will go in and inspect every single unit. You don't know how many times it's happened where somebody's toilet's running all day long and they don't even think of it. So as homeowners, most of us are homeowners, we realize that if our toilet's running, we're losing water and money every month. But tenants don't seem to pay attention. They don't understand, don't know. And even though we write it in their lease, you have to tell us when stuff like this is happening. They don't always think of it. They just think, oh, it's just an annoying inconvenience. They don't realize or don't think about what it costs the landlord to pay for that extra water bill every month. What else? Be around like-minded people, because other people can give you tips and tricks all the time too. Like I learn stuff from my students all the time. They're in different areas than me. They get different opportunities. I have a lady just buying out just outside of Toronto right now, and there's an opportunity where they can let me just think if I remember what it was. It was putting power, I can't remember if it was power energy meters in each of the units, power energy and water in each of the units for a specific cost. And she's of course renovating the whole building, so she was wondering if it's a good idea to just buy it outright or to put it on a payment plan. They had it on a payment plan, which was like $79 a month or something like that. Well, if you don't have the money, and it's an ongoing, say you already own it, then maybe do the $79 a month. But in her case, she's looking at refinancing it out. After she's done all the renovations, it didn't make any sense to do it on a payment plan. It made more sense to pay it up front and then get it financed when she goes back to the lender, because this way she can show that she doesn't have any of those utility bills anymore that the old owner used to have. And I think it was a cost of like $27,000 for a 9-unit building. So it totally made sense. And I'm not even sure, because we're not in a position right now to look, but I'm not even sure if that's available in Saskatchewan. But I learned that entirely from a student. So just be open, be around other like-minded people. It's amazing what you learn. I know we passed on to a lot of people about, deferring our mortgages in the COVID crisis, because you don't know what's happening. And May was actually our worst month for collecting rent. So for those people that are just going to play the waiting game, well, their May could be really bad, their June could be really bad, then they're scrambling, and I'm always scared that they're going to run out of money. So I was first one in, like I think the Monday after everything kind of got shut down, we were in there asking every one of them. And we asked for the maximum 6 months because we didn't want to have to go back. And in most cases we got it. There were some cases we didn't. For one example, we have 6 mortgages with one bank, and they said we can only do 3 of those. So I said, yeah, well, that works. And they allowed us to pick the highest 3 out of the 6, so that worked for us. But most of them are looking at 6 months. Some of them have said, well, we'll defer 3 months, and if you still need it in 3 months, we'll defer again. And my idea is that, if we end up with extra money in our bank account, we can always pay it down then. And if we don't, then we're ahead of the game. Because, you don't want to get caught with your pants down in a situation like that. Like we had no idea. We had a pretty decent March, pretty decent April, and then May hit, and like there's many, many more people that aren't paying. And of course, there's 150 different reasons. I won't get into that. But you know, that's the other thing. When stuff like this happens, be in constant contact with your tenants. They appreciate it. They also appreciate the help that you can give them to tell them, you know, this is what benefits you probably qualify for if you're a single parent, or somebody who's laid off their work. Like, these are the benefits, because not everybody realizes, not everybody pays attention, and lots of people don't think they deserve it. I know people who haven't even applied because they think, oh, I don't need it, I don't deserve it. But you have to make that decision for yourself, I guess, is what it comes right down to it. But in a business, sometimes you have to make that call. Sometimes it's okay if you got lots of cash reserves to go ahead and keep paying. But like I said, this is a crisis. We don't really know how long it's going to last. So keep your business, keep your multifamily, treat it as a business, and you'll do well in the long run. So hopefully you got value out of that. If you have any questions, just shoot them out to me, and I look forward to talking to you all on Monday for Mindset Monday. Thanks, everyone. Bye for now. Hey, hi, Chris. Hi, Rick. Hi, Jancy. Nice to see you guys on.